Hello traders, Gary Wagner here about 10:30. This is Trending Markets for Thursday, August 6, 2015. For 6 consecutive days, we have seen this market track lower, trade lower. I'm talking about the equities markets. Dow Jones Industrial Average off about 120 points on the day. It is off of the lows, but not by a tremendous amount. I want to pull up the chart that we've been looking at, of course, this being our 480-minute chart, because what is interesting, let me just scale this a little bit and kind of tighten up some of the candles here. But what's interesting when we look at this is the fact that we have noted in terms of this downward biased set of channel lines that we have put in here, is that it has been up till the recent history, meaning this particular point here, the last week or so, it has been genuinely tracking, call it from the bottom to almost the top here, but definitely the bottom to the top. In other words, the entire spectrum of this channel. However, we saw that kind of separated from the trend as this market came up, and just above the midpoint of this particular market move, midpoint being right in here, we actually saw it reverse direction and trade lower. That's the scenario that we're in now. The real question, and we posed this question for a little bit yesterday, was if in fact we continue to track lower. We certainly are, and if we reach the bottom of this channel, we certainly have. Will this be a supportive area? In other words, will we see a bounce from this market and a move to the upside, or possibly even a break below that? Because a break below that could signal, at least as far as I'm concerned, a real potential correction in the market. Of course, we have no indication of that, but with the jobs report coming out tomorrow, we could see a significant move one way or the other in these equities markets. So that's certainly something that we'll want to take a serious note of and follow very closely. S&P 500 also off on the day, trading above 2,000, but definitely trading below 2,100. I believe 2072 is really the key number to watch. We're currently trading down about 14 points, or about a little over 0.5%, 0.68% on the day. Now, the big news in commodities that we follow is crude light. Continues to fall. That market currently trending well below $45, now at $44.71. And as you know, it has been our belief that we will probably see crude go as low as $43 per barrel. Now, here's the interesting thing. When you take a look at low oil prices, a lot of what you hear on the news is talk about how that affects oil producing companies. And absolutely true. If the raw commodity that they manufacture, in this case they pump out of the ground, declines, that has to curtail any potential profits that they could likely see. However, realize that there is a multitude of companies that rely on this particular commodity to make their end product, whether you're looking at tires, which really is oil dependent. I believe it's anywhere between 6 to 10 gallons of oil per tire. Or whether you look at some of the other ones like the plastic industry, which is basically a petroleum-based product. These companies really stand the opportunity to fare very well in that the required commodity that they utilize to manufacture their end product has gotten a lot less expensive. So where is crude going to fall to? Well, we still believe 43 is the number. And as I said, that is simply based upon the lows that we were looking at when this market fell last time. It fell to a low of approximately $43. Now, as I said, we're sitting below 45, and we'll have to see how this market bottoms, and most importantly, at what price point it does bottom. When we look at our currencies today, again, very, very quiet activity, although a little bit more down 1.8% in the dollar. We're long at 67, trading at 77. So we're roughly in the same place we entered the trade. We're a little bit below this, but nonetheless, we have a quiet market here. When we look at our daily chart, in the dollar, there's no doubt you can see that over these last couple of trading days, we've seen this market absolutely, in terms of range and in terms of relationship between the open and close, have these consolidating type dojis. And there's no doubt that many traders are awaiting the news of the job report as an indication as to where the U.S. dollar is going to go. Of course, if the report comes in a favorable way, at or above expectation, that's going to be extremely bullish for the dollar, because above or at expectation on this jobs report will be a signal to traders that the Fed is probably on track to begin rate hikes as early as next month in September. Well below expectation, you're looking at the opposite. So the fact that we have seen this market trade not sideways, but in a consolidating manner over the last couple days does not surprise me that much. When we look at our euro dollar, let's go ahead and pull that up. You do have the euro dollar higher on the day. Now, whereas we were looking at 0.18% in terms of net change in the U.S. dollar, euro dollar is about 0.25%, 0.25%, up about 27 points, 109.26. We're short at 15. So again, right around where we entered the market. In this case, it is a couple of points above us. Just as in the case of the dollar, it's a couple of points below us. It's all about the jobs report. That long await will be over tomorrow, and we'll see where these markets go based upon how that report comes in. This has been Gary Wagner for Trending Markets. We'll talk to you tomorrow, day of the jobs report and the weekly wrap-up. Bye-bye.